Amar. I am the owner of Financial Juice. You've probably been getting a lot of great emails from us every day with all the news items and this type of thing. And we wanted to expand upon that by working with some of the great educators that we work with and are involved with, and really get them to share their insights and information. So Bob Lang, he's going to be joining us today. He's a private trader in the equity and options market. His company is Aztec Capital. Bob is a trading mentor, and he's been on CNBC with Jim Cramer and on Mad Money, of course. And previously, Bob managed a $300 million pension and a 401k plan for Sunkist growers. In early 2000, he launched Aztec Partners, a hedge fund for private and institutional clients, which was a top-performing fund that year relative to its peer group. So Bob comes to us with a wealth of experience, and his subject today is unusual options activity, which I'm sure many of you guys know is a subject close to my heart. Bob, take it away. It's all yours.
Amar, thank you very much. It's great to be with all of you this afternoon, and I really do appreciate the kindness, the gesture, and the opportunity to talk about something that has really been working extremely well for me, for my clients, and for people in my chat room. And it's unusual options activity. Now, this is something Amar said that it was kind of close to his, near and dear to his heart of what he does. And of course, they have a new product that's either launched or is about ready to launch. Unusual options activity, right? And this is the sort of thing that can give us, if we're quote unquote the little guy. I'm probably no different than all of you. I do manage several client accounts, but I don't have access to the big money. The big money flow is where it's all about, and I don't have access to hundreds of millions or billions of dollars. Okay, and when we're talking about stocks versus options, right, we can talk about where all the big money is flowing. But if everybody's familiar with the concept called dark pools, and that is really where institutions have an opportunity to secretly move into stocks without making a big ripple in the market. When what I like to compare a big institutional player to is like an elephant. All right, when an elephant steps in water, it makes a big splash and everybody gets wet who's around that elephant. Now, I just want to be I'm no elephant. I just want to be a fly on an elephant's ass. I want to cruise along with that elephant because he seems to know where the big moves are being made. I know we hear talk about high frequency trading and algorithmic trading and that sort of stuff, and while they're important to understand that they do have an impact on price discovery and of volume as well, it certainly is not the reason why price action is where it is every single day. It's still with institutions. Now, that doesn't mean that institutions don't have those kind of desks. They do. Goldman Sachs, Morgan Stanley, some of these other companies all have these sort of things. These sort of desks, but it's the big money flows that are really the most meaningful. And I have no access to these dark pools when it comes to maybe somebody coming in and buying 10 million shares of Facebook or 50 million shares of Microsoft or something like that. I don't have that access, right? But I do have access to something called option order flow. And I have a tool that I use, a service that I use as well, to be able to find where the big money is flowing in these in certain names. And it's not perfect, it's not precise, nothing ever is. But I do think that if you get a hold and get a grip on what option order flow is all about, and we're going to talk about it here in just a couple of minutes, I do think that you can set this up as a great advantage to you as just another tool in your toolbox. I probably spend about 70 to 80% of my day looking at the flow and analyzing it and trying to figure it out. I have the same information that the Nigerians have, Dan Nathan from Fast Money, Andrew Keen, who runs Keen on the Markets, Live Vol Pro, anybody out there who claims that they have an edge and have all the same, have all the answers to option order flow, I see the same thing. So for me, as a quote unquote little guy, as we talked about, I like it because it allows me to step to the starting line at the same time as everybody else. You know how important it is to be able to get on the starting line at the same time as everybody else? It is absolutely critical. That means nobody can get going before me unless I'm not there. If I'm there watching what's going on during that whole 6.5 hours of trading day, then nobody really has an advantage over me. My edge, it would be how I can interpret and mind you, the edge of anybody else who's looking at option order flow, how you are able to interpret that flow, whether it's meaningful, whether it's meaningless, is it something that I really need to follow up on, is it something that's repeated, et cetera, et cetera. So my edge is being able to interpret that flow and making sure and seeing if it is really something that there is a big move that is coming after that particular day. So we'll move on, move forward over here. But I wanted to set that up for you because I think it's important to understand where about a little bit about options flow. So and I'll take some questions as well from you as we move along. So a little bit about me. I'm going to pass on this here, but because Amar did a very nice job in bringing me and explaining it about me. This is my service, Explosive Options. We'll talk about that a little bit later on. So option order flow, it's basic, it's simple, but a lot of people really don't know what it means and what it's all about. And I'm going to explain it to you. Simply put, it is the amount of options, calls or puts that are flowing every single day. Now, I have a filter in the tool that I use, the service that I use, that screens for certain large amounts of volume. And it could be anywhere from 1,000 contracts or 500 or 1,000 contracts on up. And when we see some big order flow, I have to go. What I'll do is I'll take that particular trade idea, or the particular trade that's being made, and try and put some sense about it. Really, what we're talking about here, folks, is common sense. When you think about a trade that came down last year, I want to say it might have been August or September. Somebody bought like 100,000 of the June 130 calls. I could be wrong, but this is probably, it's pretty close. June 130 calls of Facebook. All right. So at the time, Facebook was about $70. So this guy, and he paid a nickel for all these, a nickel for each of them, 100,000 of them times a nickel. Okay, so what is that? What is 100,000 contracts? That's 10 million shares, a nickel. What is that? $500,000. All right, so it's a $500,000 bet that the stock is going to be 130. Now we know the kind. Think about let's use a little bit of common sense over here, right? We know the stock is $70. We know the stock has the company has an enormous market cap. At the time it was 70, it was over $200 billion. So I mean, this guy would be looking for this company to get over a $370 billion market cap by then. And this was a wild bet. And so you look at something like that and you have to look at that flow and you dismiss it. And you say, look, it's just not meaningful. It just doesn't make sense. This guy's, I call it a stupid trade. It really is dumb when you think about it. The rationale of it doesn't mean anything. In addition, the guy could have bought the 115 call for a nickel. Why would he go all the way out to the 130? And you say to yourself, well, hey, Bob, maybe it wasn't a buyer. Maybe it was a seller. Well, you know what? In that particular trade, I saw it was a buyer. And I'm telling you something, folks. I'm scratching my head wondering, what is this guy doing? Just throwing away $500,000. What's up? What's going on with this? So, sometimes these things make sense. Other times they don't make sense. But if you use common sense, looking at these trades and examining them and understanding if they have some meaning, and you know what all we're talking about here, folks, and I wrote this in an email to a client today. It's like an endless jigsaw puzzle here, right? We got the corners in place. We're putting in some other little pieces in here, and the puzzle just just never ends, right? So we got these pieces of the puzzle that fit in here, and we just kind of keep fitting in it, and they're just more pieces just keep coming on the table to put together. Our job is just to keep working that puzzle. It's like a perpetual puzzle, it never ends. Okay, make sense? So simply put, order flow is all it is we see some order flow coming in. And in fact, I'm going to show you what I look at. Oh, I'm not able to show you what I look at. But anyway, for instance, right now, towards the end of the day, somebody bought 10,000 FXI June 15th, or June 2015, 64 calls for 15 cents. It was done on the bid side at the Philadelphia Exchange. And I see a few other things as well too. A smaller, this is the spread, it was opening. So what is that meaningful or not? 15 cents, you think it times 10,000 times 100, $150,000, not really too meaningful. I'm looking for stuff that's $1 million in size or more. Oftentimes we see something at 2, 3, 5 million that really is meaningful. And plus, if you see it's a spread that's opening, you got to see if there's another trade behind it too. So in this particular case, I'm seeing those June 64 calls were sold, and I'm seeing June 60 calls were bought right behind it, same price. And now I'm seeing it was canceled. So some of these trades, you got to be smart about it. You got to wait and got to see these things when they're happening. So simply put, all the flow is just telling you there was a buyer or a seller coming in an enormous amount of size. Okay. Now there's always some confusion there, right? And the way I have things looked at is I'm able to tell the screens that I have, and I know the ones that Amar has, tell you if it's on the bid side or the ask side. And then I'm sure it'll also tell you if it was above the ask or if it was below the bid. And we also have mid-range as well too. So that's when we have to do a little bit more digging and find out if it really was a buy or really was a sell. And again, it's all about making an assessment. Make an assessment, make a decision, make a judgment. Say to yourself, is this something that's really meaningful that I need to follow up on? Is this something that's really hot? I'm going to show you something on the on the order flow that happened yesterday in CSX, and actually it happened on Friday as well too. But I'll hit that at the end of the presentation. So oftentimes we're left wondering when we see some of this flow, well, what's it all about? Wrong question. Don't ask that. That's not the question. We need to know why. We just need to know what and how much. Period. We don't really care the reasons. We don't. All we care about is that it happened, and what was the size. Did it happen over again and over again and over again, et cetera, et cetera. That is what we really care about, and that's what really makes us gives us an edge in option flow analysis. Next slide. So when we're looking at option flow, we're always wondering, who's doing this? Who's doing the flow? Is it some small guy? Is it a big guy? Is it a hedge fund? Is it a mutual fund? Is it George Soros? Is it Bill Ackman? Who is it? Again, not the right question to ask. We really don't care who it is. I don't care. I just see the money flowing, and look, Bill Ackman's money is as good as David Einhorn's money, which is as good as Doug Cass's money. I really don't care who it is. All I care about is that it's happening, and I'm going to follow up on it and see if it makes any sense. So is it a wild and crazy bet? I gave you an example about Facebook here just a little while ago. It was a real wild and crazy bet. It didn't really make any sense to me, and this guy's got 2 more months left to go to see Facebook above 130. My money is betting on the fact that it won't get there. I don't know about you, but you probably think that think the same way too. So is it a mistake or an error as well too? Sometimes we see mistakes or errors, and I just told you about a trade that was on the FXI that was canceled. And that, and of course, that was one of those bets that you would think that it was something behind it, and then all of a sudden it comes back and says it wasn't a good trade. Then you got to start over again. So, what are some of the flow advantages out there? Size versus open interest. What I like to look for is some outsized bet versus what is in the open interest, and that tells you that somebody is coming in with some big dollars because they know something is going to be happening down the road. So but then again, if you find another trade, for instance, let me see if we can find this one for you. All right, everybody should be able to see my Thinkorswim montage here in just a moment. No, you can't see that. Okay, that's fine. So for instance, today, I was sharing the wrong screen. So for instance, today, the Time Warner July 92.50 strike. So you guys can all look this up. This would be a good exercise for you to do. July 92.50 calls traded 25,500 contracts today. There was 28,000 in the open interest. So while that number of trades today was pretty impressive, was certainly a standout, it wasn't really anything that I needed to really be concerned with just as of yet, because as I assess the situation, we've got 3 months to go on this expiration till July. 87 days left to go. We've got a stock that is $8 out of the money. We know there's a deal that's on the table for Comcast and Time Warner. I don't know exactly what the price is of it. If they're going to, we've heard some stories over the last couple of days that this deal may not go through regulatory approval. So this traded within the open interest that was out there. So here's the deal. Maybe it was closing. We'll find out tomorrow. Maybe this person was closing at 88.99, 88 to 92 cents. This is not a bet I'd really want to get on. But if we look at something else here today, Gilead. All right, this was up $4.50 today, closed at a little over $105. All right, I'm looking at contracts traded today that were just enormous across most strikes, including the weeklies from this week. They were scorching today on the call side. Put side was modestly heavy, but certainly much higher on the call side for this week's Gilead strikes, from 100 all the way up to 112. Next week's not so much. The following week, pretty hot on the 109, 110, 111 line. And then if you look at the May monthlies, enormous amount of volume coming in. Now there's a big strike, big open interest on the strike of the 110s. Traded about 10% of that open interest today. There's 43,000 of them. There were 4,300 that were traded today. But then if you look across some of these other strikes, there was quite a bit in June. There was a little bit in July. So you get the message, right? You get the point here. There was some people that were coming really hard after Gilead all day long today. All right. And if you don't believe me, let's take a look at the option statistics. 82,000 calls traded today versus 38,000 puts. I look at but what's more meaningful here is the amount that were traded at the bid or below. All right. And for the call side, it was about 8,700. So about 10%, little more than 10% were traded at the bid or below. So what does that mean? Simply put, that means that less than 10%, or just about 10% of the options that were traded were sold. 10%. 90% of them were bought. Now, there was a very interesting development yesterday in a stock called CSX. And I promise I'll get back to the slides here in just a minute, but I just want to try to make a point here for you. There was a similar statistical story here with CSX, where there was 20 times as many calls traded than puts, and the call volume was enormous, 63,000 versus about 1,500 or I'm sorry, 2,800 puts. 20 times. There was 20 times. It was unbelievable. So it was huge. So I said, okay, well, it's got to be some people selling, right? Of the 63,000 calls that were bought yesterday, guys, less than 10% were sold. 90%, more than 90% of those calls were bought yesterday. So that tells me something is happening. Well, today it was a pretty good size amount of of calls bought. There's 67,000 and 26,000 on the put side, and the
Hey, Bob.
stock was yes,
So,
sir.
sorry to jump in, buddy. Are you sharing your charts at the moment?
No, I'm not. I'm just reading something off of.
Okay.
I don't know how to, Amar. I don't know how to change the call it the screen. So I just went ahead and just read this off of my.
What you can do is just drag the platform over, or you can just click on screen share on the left hand side again and just choose a different screen. That's probably the easiest way.
Okay.
And you can choose it because I think it would help.
That's a good idea.
If they had the visual.
Sorry about that, guys. Let me see here. Let's see here. How's that? Is that better?
There you go. There we go. That's great.
Okay. Again, sorry guys. Okay, so let's take a look at the CSX here. Okay, if you guys can view in here, I'm looking at the May and the June strikes today. You can see, look at some of this volume coming in here. 13,000, 5,000, 4,000. We did have some puts. Those were sold. I saw that earlier today on the May 34 line. That was done earlier this morning when the stock was down, and it closed strong today. The stock was down to about 33.5. It was down over a buck at one point, and it closed strongly today. And it has a beautiful reversal candle on that. But we had some good strong volume here in the June. And again, here's the statistics that I was talking to you about: 67,000 on the total volume, 25,000 at the bid or below. So there was some selling of calls today, quite a bit more than yesterday. So let me show you that Gilead again that we were talking about. Look at that, 82,000 versus 38,000 on the stats. So somebody was coming in there, wicked buying coming in on Gilead all day long. Again, we don't know who it was. We don't care who it was. We don't know why it was. We don't care why it was. All we know is that it was happening. Period. That's all we care about, and it's happening, and we're going to follow the flow accordingly. All right. Let me get back to the other. Get back to the slides here. Right. Okay. All right. So open book, no hiding or dark pools. We talked about that a little bit earlier, right? And there's no hiding when it comes to open options trading. It's when the emperor wears no clothes, right? And what I found is following the flow like it is gives me an advantage of about 65 to 70% of the time. Now, oftentimes the timing doesn't work exactly right. Okay, well, we can overcome that by doing what? Taking an extra month, going a lower, I mean, even possibly going a strike or two lower in the money, simultaneously by taking a little bit extra time. When I see this guy coming in here, buying an out of the money call, he's showing me his hand. I'm like playing poker. I'm seeing the guy's hand right in front of my face. I see what he's doing. I don't know exactly the reason why he's doing it. Maybe he's a nutcase. But I see exactly what he's doing right in front of me. So I can piggyback and jump right behind him and say, look, you know what? I like your trade, buddy. But you know what? I'm not going to take that kind of risk. I'm going to take a little bit different tactic, and I'm going to go slightly out of the money. I'm not slightly out of the money, possibly in the money, and I'm going to take a little bit more time than you are. If you're going to go to May, you know what? I'm going to go to June. And if you're right, I'm going to get paid too. Maybe not as handsomely as you are, but I'm still going to get paid. And isn't that what it's all about here? Again, I want to be like a fly on an elephant's ass. I told you that before. I just want to go along with where the big money is flowing. I just want to go along with the big elephant. All right. Repetition. I find some of the best option flow, order option flow moves are done with repetition. Means that happening day after day after day. Friday was not the first day of CSX, nor was yesterday, nor was today. We saw some of this flow happening about a week or two ago. We saw some really good flow coming in on Kraft about 6-7 weeks ago before that deal happened with Buffett and with Heinz. All right. We saw some big flow coming in with Catamaran, CTRX. Again, before that deal came down where they got bought. So These things happen over and over and over again. Today we're seeing in the after hours, we're seeing some positive action after earnings on Yum Brands, YUM. This was a stock that we saw an enormous amount of call buying going on last 2 weeks. Okay, somebody was keen into it, and they're going to get paid on it. So this is what I'm talking about. Day after day after day. So volume. Why is it so important to follow this flow? It's because volume moves before price action. You get these volume moves because what is volume? Volume is, think of volume like a sponge. Okay, volume is like a sponge. It's going to soak up all the wet spots all over the counter. You spill something, you spill some water on the counter, you take a sponge and you pick it all up. All right, and when it's gone, there's no more water left, right? Well, that's the same thing with options. When you soak up all the options, there's nothing left. There's nothing left for price to do but do what? Go up, go higher. So again, I say insider info over here. I have no idea the reasons why, nor do I care. I just know that it's happening. It could be insider information. Maybe it's not. Who knows? Again, this is not anything that I really care to know about. I really don't mind it. I really don't need to know about it. If you're following the options flow, that's all you really care about is the flow, not the reason for it, folks. Okay, if you're trying to rationalize what you're doing because you don't know, understand it then and learn it and know it, and then you'll be able to apply it. But I see it the same time as all the big guys do, meaning I see it the same thing as the Nigerians do. I see it as everybody else, Live Ball Pro, et cetera, et cetera. Everybody has access to the same information at the same point in time. We get to start with them at the starting line, okay? We start the race at the same point. When the gun starts and you see that flow coming in, then that's when the race really starts, and it's all about, well, who can interpret that flow the best? And who makes it right? And that's where I think we have an advantage. So what are some of the disadvantages of flow? I think, the purpose of that flow may be unknown. We don't know what's going on. Again, that's a question that we don't really care about, but then we can suffer by not knowing what is behind that particular trade, right? We see a lot of flow coming in on spider calls and NASDAQ calls and NASDAQ puts and Russell puts and all this other stuff, and volatility puts and volatility calls, and we don't really know what the genesis of those trades are all about. We don't know what the reason for those trades are, and we can get bit by not knowing those things. That's just an information gap that we all have. If we don't know anything per specific reason, then we are a little bit vulnerable there to something bad happening. Well, I'll take that risk because as I've told you earlier, I've seen this flow work at about 65 to 70% of the time for me. We often see black swan trades, and are these really meaningful? I saw some guy came in and bought some S&P 500 calls that were 3,000 strike, and we also saw some calls, some guy buying, or some puts, some guy buying the 635 strike. Now that would take you lower than the generational bottom that came in March of 2009. 635. I'm not kidding you. They expire probably in about a year and a half. So some guy is really thinking doomsday out there, aren't they? But we often see these things, and again, we have to make an assessment, use some common sense, use some knowledge, and say to yourself, look, is that something that I really want to follow? Is that a trade that I really want to get into? I really, and something like that, I would have to say no. All right. So we also have news that may contradict the trade. We may have some times where I'll give you an example. One trade that I got blasted on earlier this year in January, all right, was SanDisk. I'm not afraid to admit it. I got blasted on that one. I got clobbered. I got my head handed to me on that one because some news came out before earnings and said that I guess they said that they were going to miss their quarter, and the stock got pasted. It happens, all right? So news comes out and contradicted the trade that I was looking at because there was a lot of positive flow, positive volume coming in on the call action from the 80s, 85s, all the way up to 100. So I went with that trade. I followed it, and I got pasted on it. It happens to all of us. I'm not afraid to admit it. Do you know what? I I took it off the table, moved on, and actually have made up for that loss with a couple of future trades as well. So the flow may be tainted, and that is something that we have to be really, really careful about, and seeing that flow. And again, that some of the taintedness comes from canceled trades or bad order entry or something like that, and we're not able to see what that is all about. And in addition, when a trade comes through, we don't know if that's a closing trade or an opening trade sometimes. And so we'll see. I'll see BTO, buy to open, on a particular trade, but you know what? That may be offsetting somebody else's closing trade. So unless we have both pieces or multiple pieces to examine and analyze, it may be difficult to put a trade together on that. And is it clarity? Is it a sell or a buy? And we just talked about that just a moment ago. So here's some examples of some recent good flow. I told you about the Kraft. Kraft was an enormous win on the June 67.50 call buyers, so about 50 to 70 cents. This sucker went to 17 to 20 bucks right after that deal was announced. So that was an enormous percentage gainer. HCNP was a huge buyers, were repeated day after day after day. And finally, when that deal came down, actually the same day as that catamaran, the CTRX, there was some huge call volume right before the buyout. Huge flow, thousands and thousands of contracts. And so I think for some of you who if this is a completely new concept or a completely new experience for you, you have to see these things happen in real time, right in front of your face. I don't expect any of you to come in here and actually buy into what I'm saying as anything but a falsehood. Okay, I get it. I totally understand. But if I've armed you with some information and some data and helping you learn on how to use it, I mean, Amar's new tool with the unusual options activity is a fantastic place to start. You see this stuff and you'll be able to look at it and interpret it for yourself and say, look, this is fantastic. I really need to see this, to give this a try. All right. What you need to do is see this thing happen in real time. See some of the flow. See how it works out. Take a chance maybe with a trade or two, or just paper trade or something like that. This is something that I think a lot of small traders, especially options traders, can use as a great advantage for trading. Okay. Some more examples of recent flow we had was in Facebook. Was a beautiful trade that we hit just about a month or so ago when it triggered. When it hit the trigger of 8209 in March, that was a chart trigger for me. Buyers just piled into those weeklies. It took the price literally in 2 days up to 86 bucks. So that was a fantastic move for that one particular one. Just last week, Dean Foods on the April 16, we saw some enormous flow. All right. 4,000 something contracts. Now today traded about 1,700 contracts of the May 18 strike. I'm sorry, that was the May 16th trade, the 4,000. Today it was the May 18 strike, 1,700 contracts traded on that today. It's enormous, massive volume on that thing. So this is the sort of thing that we're looking for to get our advantage against the market. CSX was a great one. Again, end of day, April 17th. That was last week. More than 27,000 contracts traded in the last 45 minutes of that May 34 call strike. 27,000 of those things against an open interest of less than 800. 800. Think about that, folks, for just a minute, okay? 800 contracts were open. 27,000 opened up on that particular day. So let's see how many are still open today. I'm seeing about 24,000 of those still open, so maybe about 3,000 of them closed. But we saw some more strikes that were opened up today, and like for instance, the May 40 call was opened up today. We saw the May 36 call that was opened up today. So we see people rolling into higher strikes. What does that mean? When you're rolling from a lower strike into a higher strike, it means somebody believes that the prices are going to go higher. Period. That's all you got. That's all you got to think about. Okay. All right. Moving on here. So how do we interpret the flow? And everyone really has access to the information. I touched upon some of this earlier today. The Nigerians, Liveball Pro, et cetera, other tweeters, and us. We all have the same information. So it's how you interpret the flow, the quickness of the assessment, if it's a correct one or not, is the key to your success. And finally, I'm going to wrap it up here with dealing with noises and distractions. I think that one of the problems that we all have is we're listening to too much stuff out there that is distracting to us and really is really misinformation. For instance, if you're watching CNBC or Fox Business or reading any particular points of view about the markets or is Bloomberg or what have you, these are the sort of things that will take you away from being successful. Because if you're going to be lazy, I'm not saying any of you are lazy, but I'm saying if you're going to sit there and let somebody else tell you what things are like in the markets, well, all you're going to do is be susceptible to his weaknesses and his failures, right? If you're going to follow along with some guy, some guru or what have you, and not actually put the work in and do what you're doing, well, God help you if you're going to with your money and with your accounts. Because I tell you what right now, I've seen more people blow it because they didn't want to put the work in, they didn't want to study, they didn't want to do what it took to be successful. They'd instead listen to the media, listen to the noise and the distractions, people out there who don't really have your own interest at heart. And that's what it's all about. Do you have some interest in helping others? I do. I certainly do. And I give away a lot of stuff as you possibly as you know. I mean, I put a lot of stuff out there on Twitter and on elsewhere. We have a very reasonably priced chat room, $69 a month. I know some of these other chat rooms are $400-500 a month. We talk about the flow. We do all this stuff regularly during the day. So what you need to do is you need to ignore all the noise and realize that everybody has an opinion. I think opinions are like, excuse my French, opinions are like assholes. Everybody has one and they all stink. We don't want to let it influence how we act. All right. It's nice to water cooler talk, nice to hear some opinions and so forth. But at the end of the day, we have to do the work and make sure that we understand what the market is telling us and go with it accordingly. Thank you very much. I appreciate everybody being here. Amar, thank you again for allowing me to talk with your group today here. It's been fun. I really enjoyed this. I put these slides together just a week or so ago because it was a new topic for me, and I really wanted to share my knowledge and experiences with unusual options activity and the option order flow stuff with all of you. And I think it's an important component. If you guys can all understand this and learn from it and adopt it into your quiver, or another arrow in your quiver, then I think you're gonna be a far better in a far better place. And I know Amar was showing this on your on the Google Hangout over here. Here's a chance for you guys to jump on board with me. Explosive options over here. We do have the chat room, which is we talked about right over here. $69 a month. I mean, we get the same stuff that this is my partner Sue Smith. We talk about some of the same stuff every single day that everybody else does with the flow. And again, I hope you guys all learned something today. I've really enjoyed being here, and I hope maybe we'll get a chance to see you in the chat room later on this week. Let me see if I don't know if any Amar, if we have some questions over here.
Sure. Can you see the chat on the right hand side, Bob? You should see.
Yes, I do. I just see.
If you've got any questions, by all means, feel free to type them in right now. So explosiveoptions.net, that is Bob's site if you want to check out his service. The financial juice service that Bob was mentioning is unusualactivity.net. That's our new option service where we focus on insider transactions and unusual options activity, but basically anything that is likely to move a stock. We combine that information with volume. You can discover that there. So by all means, check that out. And Bob's stuff is good. We try and find guys that are well respected in our industry, and Bob certainly is. So definitely want you to check out his site, as well as the trading chat room that he's got. If you go to the website, you'll see under the trading resources section. In fact, let me share my screen. If I can quickly just do that. Oh, that's weird. It's not letting me click. Oh, here we go. Got it now. Hopefully you guys can all see my screen right now. If you actually go to the trading resources section on his website, you will see a ton of ebooks, videos. I mean, he definitely has put a lot of time and effort into putting free information together for all of his users. There's a great Twitter stream as well. So there's definitely a ton of information that you can get just from, just for free, looking at his website as well.
Yeah, and but what I find interesting, Amar, and is the you with the unusual options activity product that you put together here. It's you're hitting on something that a lot of people are really starting to gravitate towards and find a lot of interest in. And I think if you the way you present it, the way you put it out there for people, is of paramount importance. If you just throw things out there into the wind, Absolutely. Then it's not really meaningful, right? You have no way. You have to gather the stuff. I mean, if somebody throws out a whole bunch of, it's like an Easter egg hunt. If you throw out eggs in the yard, it's a free for all to go ahead and jump and grab as many eggs. But if you don't know what you're doing with it, with the information, it's much more difficult to do. And again, you talk about options a lot, and the unusual options activity. It's time sensitive, right? You've got to get on this stuff ASAP. So you have to have a way of figuring out what that information is all about, what that flow is worth, and is it meaningful? I'll give you an example. We had some really good flow last couple weeks on, actually a month or so, on that Mylan. Mylan and Teva, and I guess Teva came in and said they were going to do a deal with them. There's another one that we spotted from back in late February and March, and some of you may remember that VRX Valiant came in and were making an offer for SLXP, Salix Pharmaceuticals, and it seemed like it was a pretty tight deal. Pretty sound, but there was a ton of flow in some calls, $10 out of the money, or $10 higher than that, and you start scratching your head. You start saying to yourself, well, geez, if they think a deal is coming in, why would somebody else come in? And again, that's not the question asked. You don't ask why. You just say what. And what ended up happening? They got a higher deal from some, I can't remember who it was. Somebody else came in with a higher deal. Anyway, but the point is that we saw the flow. We jumped in there and took advantage of it, even after this deal was made.
Absolutely. I think you put it very succinctly. We're just trying to be the fly on the elephant's ass.
You like that?
I love that. I'm gonna use that as the tagline for unusualactivity.net now.
Oh yeah, no, absolutely. I'm gonna see a logo on your on your site soon, with an elephant with a little fly on it, right?
Yeah, helping you become the fly on the elephant's ass.
Well, yeah, and you think about it, in theory, it makes sense, right? Because we all know. Again, I mean, a lot of people, tell me about all this bullshit about, excuse my French, about high frequency trading having such an impact on price, and algorithmic trading and futures trading. It's a bunch of BS. It really is. Where the money is flowing is the big money, and that's 80% of all the money that's flowing is coming from mutual funds, hedge funds, charitable trusts, pension funds, overseas funds, everything like that. That's where the money is coming from. Right, and that's all we really care about. I just want to know where that money is flowing. I don't care about all this other stuff. I don't care about the guy who comes in for a millisecond and trades for 2 pennies on Apple. I don't care about that guy. I care about the guy who's going to come in with the big money, who's going to make an impact and make my bottom line jump.
Absolutely. Absolutely. I think
So no, I
that's
I didn't mean to get all excited there. I really wanted to make
we
a
love the
stress.
passion.
Well, I just wanted to stress a point here because there's a lot of people out there who don't understand, who hear all this stuff and they assume that it's the gospel and that it's the truth, and it truly is not.
Yeah,
And what's truth is what the market is telling you. What's truth is what you see. And like for instance, your product, unusual options activity, the truth is price. At the end of the day, period. That's all that really matters.
yeah,
If you see the price in front of you come changing with that unusual options activity, the volume, that's all you need to know, right?
absolutely. It's as simple as that. That's what makes things happen. The movement and price.
Yep.
So there's a couple of questions coming in. Do
Oh,
you
okay.
have a free trial to your chat room?
No,
Or
no
if you
free
could.
trial. $69 a month. It's pretty uh it's pretty
Yeah,
cheap as it is. You know, I mean, some of these other guys are charging three, four, $500 a month. At $69 a month, yeah,
that's
we
very reasonable.
purposely kept purposely Amar kept it cheap. Well, I don't want
Yeah.
to say cheap, but inexpensive for a reason because we wanted to create a community that's safe, that people can ask questions, people who are novices, people who are intermediate, people who are advanced. They can come in there and get their questions answered. They can learn. They can see what we're doing. It wasn't meant for us to get rich off of this chat room. Well, we do pretty well off of it. I mean, admittedly, we have a good group of people, and we've had people in here, Amar, who've been there since day one, and that was almost 2 years ago. And for $69 a month, it's a cheap tuition to pay. It's a small tuition to pay for learning the things that will make you successful in options trading.
Hey Bob, I've got a question for you. What do you think of the Fed interest rate?
Uh, let's see here. What do I think of the Fed interest rate?
Yeah.
What interest rate?
I don't know. Jim just posted
It's
that. Don't get him started on Fed interest rate. I
yeah,
thought I would get you
yeah, you don't want,
started.
yeah, you don't want to get me started. So what is a Fed interest rate? So basically it's just yeah, it's a low it's I say what because it's so low, right? It's you know, I don't really honestly we just know that the Fed put is still there. It's been in place for years, and it's the stock market is the Fed's game, and we're all just playing it. It's their game. They own the board. They own the pieces. We're just playing the game until they decide to go in a different direction, and they'll go in a different direction when there's inflation. That's all there is. Period. That's all there is to it. You know, if we see some inflation in the system and inflation expectations start to rise, they will raise rates, and it'll be it'll be tough going in the equity markets. But for now, it's fine, and we'll move as the market tells us to go.
Absolutely, guys. If there's any more questions, we're at closing door time now.
Is the latest the more recent questions at the top here? Somebody said,
So
"What parameters do you use for my screener?" Is that correct? Is it the last?
yeah, those are the most recent questions. So if you scroll
Okay.
down, you'll see
Yeah.
questions before that.
Yeah. Okay. So James asked that question. So um, parameters I use for my screener. Well, again, I look for repetition. I look for names that I look for, again, I look for common sense here. I'm not looking for, look, am I going to get interested in somebody's buying, okay, Google closed today at 5:42. If somebody's buying the 900 calls that expire at the end of the week, all right, I'm being a little bit sarcastic here, but just to make a point, do I really, if somebody bought 80,000 contracts of the 900 strike that are expiring on Friday because they have earnings coming out Thursday night, is that something I really want to buy? No, it's common sense, right? You got to look for that. So I'm looking for the common sense. I'm looking for something that I'm looking for pieces of the puzzle that I can put together with the puzzle with the puzzle that I've already done. I'm looking for the corners. Think of a jigsaw puzzle. I'm looking for the corners. I'm looking for the edges. I'm looking for the things that show a picture of me to me in my eyes and my mind that says, okay, that's worth a bet. Let's go for it. Because look, at the end of the day, are we willing to put up our capital on somebody else's bet? And frankly, I need to have a little bit more proof that that is a good bet in my mind to make, because otherwise I'm just gonna be throwing money out the window. Make sense? Barry asked me in the room all day. Unfortunately, yes, and I rarely get a chance to go to the bathroom. uh, sit up from the get up from my chair. No, we have a lot of people in the room who really participate in the room, and it's fantastic. And a lot of people bring some good ideas to the table as well. Let's see. What feed do you use to get the option activity? I subscribe to a service called Trade Dash Alert, but I think you can probably get the same thing here, Mr. McCall, from Unusual Options Activity, if it's not better. So
It's
I would certainly
unusualactivity.net.
unusualactivity.net. So
Yeah.
this is the sort of this is the product that you probably could use and gain that same type of advantage as well. Let's see who else here. Pat
It's
said
all the
she's been in
same.
the.
It's all the same. Like I think Bob pointed out numerous times in his presentation. It's pretty in terms of the unusual options activity. Everyone has access to the same information, and they all put that information out there. What we do at UA is we have that information along with insider transactions, and we have macro news information, micro news information based upon particular stocks, and we combine all of that, Google search activity, Twitter stuff, we combine it all together with volume. So what we try and do is any type of any piece of news that comes out there, we corroborate it with how that stock's been impacted in terms of volume, in terms of people actually taking trades and moving that stock. Because what you'll find is with a lot of news services, it's just news, information. There's no one, as Bob points out, there's no one looking through that information, filtering it for you. That's what we're trying to do, but we use volume information to do that filtering. We alert you to traders actually taking trades with that information. If that makes sense.
Right, and what Amar offers is a great product for you to look and try to interpret, but he makes it much easier for you to be able to break it down in a way that's very simple and easy and basic, and to come up with a quick decision. Because again, we're talking about options here. Options have a shelf life to them, and if you're not quick on the draw, you're going to lose your opportunity. And what do we find when it comes to information? And we tend to put our minds on information overload because we're always looking for more. We always want to know more. Sometimes more is less, though. More is less, meaning all you need to understand is a little bit about that flow and a little bit about how that works and the mechanics behind the setup of a particular trade. And again, this all comes with experience and knowledge and seeing these things happen over and over again. All I can wish you guys is figure it, maybe take a subscription to a service, to Unusual Activities service, try it out and see what it's all about. And again, this is not a plug just for Amar. Look, I've tried it, I've seen it, and I know it works. And I would just tell you, he's not paying me anything for this. I really don't want anything for this, but I would tell you, I will endorse good products that work and help you become better. And this is probably one of the better ones out there. I can tell you this much is I've used the product and I've had some great success finding some of the ideas off of the flow, off the order flow, and the insider information is really valuable as well too. So sorry, Amar, I interrupted you there.
No worries. I think Michael just asked a question. The unusualactivity.net.
Yeah.
If you go to the website, there's a link there for a webinar. Just watch the webinar. It'll teach you about the product, and then it will take you to the pricing of the service. We've got an offer on at the moment for early adopters where we're giving you the service for $97 for a quarter of access. So it's 3 months of access for $97, which compared to a lot of the other services out there is very inexpensive, as Bob put it.
Wow, that's holy cow! That's really good, yeah. and it's all about interpretation. Look, if you pay $450 to $500 a month for Option Monster, you're paying for them to tell you what to do. Is that consistent with the thesis? For instance, like what Bill O'Neill from Investors Business Daily would preach for years and years and years. You can either give a man a fish and feed him for a day, or teach him how to fish and feed him for a lifetime. I would like to learn how to fish, and I would like to teach people how to fish, because so they don't have to rely on me throwing them a fish every single day, right? And you want to learn how to do it. You don't want to just be told how to do it. Big difference. Amar, I see a couple other questions over here.
Sure.
Pat says she's been in the chat since day one. Says I can't trade without it. Love Pat. She has been in the room since the beginning, and she's a really great contributor in the room. Great to have her here today. Let's see. Chris said, how many high volume setups do you locate per week? How many of those fail to go up? Chris, good question. I don't know how many per week. I see we see probably hundreds of them a day. So maybe probably over 1,000 in a week. And I would say by and large, the ones that we take probably we get success on about 70% of the time. 7 out of 10. It's pretty good. I'll take that percentage. Let's see here, and I think that was probably maybe the last one, Amar. I'm not sure.
Sure, I think that's pretty much.
Broadcom and Yum alone didn't even mention. Jim says he paid for a whole year for those for those two trades. So we're in the Broadcom as well too. That's up a good 5%. Let's see here. I think it's probably it, Amar, right?
Yeah.
So, Chris actually asked a question. This is interesting. Maybe you can answer it as well too. Do you see huge flow before the pop? And I would say the answer is emphatically yes. How about you, Amar? What do you think?
I'm sorry. Do I? Yeah.
Do you see huge flow before a pop in the stock? Yeah.
Oh yeah, 100%.
Yeah, I mean that's what it is, and
that's the calling card. That's what we're looking for.
So Mike made a comment in here. It's interesting. He says I saw the Kraft June calls go through nuts. It was crazy. I mean, you just you say to yourself, that's insane. I mean, the stock Kraft was trading at $62, Amar, and then all of a sudden somebody's buying 20,000 contracts. I remember it like it was yesterday. 20,000 contracts of the 67.50 June calls. It's crazy. I mean, this is stock. This is Kraft. This is as old and stodgy as they get. But somebody knew something was going to go down. And again, you don't really have to know what it is or who it is or why. Just the fact that what is happening and how much, right? So somebody lays down 20,000, buys 2 million shares worth of the calls at 70 cents. So a $1.4 million bet, right? Out of the money. They stayed with it and they got paid buku. The one thing you got to remember about large option order flow, okay? These guys are not in there for pennies. They're in there to make dollars, okay? The big elephants are looking for the big payoff. They're big game hunters. I'm a big game hunter. That's what I'm looking for. I'm not looking to get in at $3 and get out at $3.30 and say, "Ooh, I made 10%." I'm looking to get in there at $3 and sell it at $9 or $8 or something like that. That's what I call a score. That's a win. That's what I'm looking for. And that is where these big elephants are going as well too. Maybe they're buying it at 30 cents or 70 cents or 80 cents or even $1, but they're going to get out at $6. Hello? That's a score. That's a big win. That's what they're looking for, and that's where you should be focused as well too. And if I'm following the flow, that's the kind of win I'm looking for. So there's a guy, Phil, who said he had a question here. Amar, I don't know if we can answer this, but okay, this is great. But how are you going to help us make money? Did I was I unclear about how to make money? I don't know. Tell me.
I think the phrase that fits is being the fly on the elephant's ass.
You just love that, don't you?
It's just one of the greatest things I've ever heard. I love it. It just perfectly. One, it's hilarious. Two, it perfectly describes what unusual options is all about. That's exactly what you're trying to do. That's exactly who you're trying to be.
I can't wait to see what your new logo is going to look like. You're gonna have an elephant just whacking his tail and a giant fly running his butt, right?
We'll definitely give that a shot.
I guess maybe that was the last question here. So
Okay. No worries, guys. We're gonna wrap things up now. Thank you so much for everyone who attended. There will be a recording going out after the event, so we'll definitely get that over to you as well in case you missed any of the great information that Bob shared today. And thank you so much, everyone, for your time.
Thank you very much, Amar, for having me. I really do appreciate it, and thank you all for joining in with us. I really enjoyed it. It was a lot of fun, and I do have just if you don't mind me saying so, I do have a free webinar coming up on Thursday. Everyone's invited to come to the website explosiveoptions.net, sign up. It's free, and I'm bringing in if anybody's ever heard of Tom McClellan, who runs McClellan MC Oscillators. His parents invented the McClellan oscillator. A lot of you have probably heard of it and maybe followed it before. He's going to be joining me after the close of in a fun webinar. So
Oh, very cool.
Get a chance to come on over there and sign up for that. That would be great. I don't do any selling during the webinar. It's just an information thing, just like this was today. And just trying to teach people and help them learn a little bit about trading and about sentiment. In this one particular case, about sentiment indicator. So hopefully we'll have a chance to see some of you guys in the webinar on Thursday.
Excellent. All right, guys. Thank you so much, Bob. Great job today, and everyone have a great day.
Thanks again, Amar. Thank you, everyone. Take care.